Hey guys, this is Market Update. What an amazing setup we have for the rest of this bull market. It's literally the perfect setup. I almost can't believe it. And so what is going to go wrong? Well, I'm going to go through all of this because all of the data and everything is just pointing to the kind of perfect scenario, right? You have a lot of stock market participants not really super bullish, right? They're kind of like, is it a bull market or not? You know, we're scared of all like the geopolitics and everything like that. So that's like a sentiment bull market, because the perfect bull market is when, you know, half the market is still scared. When everyone's bullish, that's when you got to look forward and say, you know, maybe things are a bit toppy. But the fact that sentiment is still not really here. People have forgotten about Bitcoin again, as they always do. To be fair, since the start of the year, it's not really moved, but you've had this big volatile move in between. In any case, everything just looks so good. I've even got my new Bitcoin hat here. Not quite sure if it's cool or a bit sad. Touch and go on that one. But anyway, we'll wear it for this video. This is an inverse head and shoulders here, right? And the setup, I mean, just look at this. So if you're looking for a breakout of an inverse head and shoulders, you know, what's that, 130,000, something like that. If you look at global money supply as well, which has an almost 100% correlation with the Bitcoin price, and you may say, oh, it's too easy, right? That's not going to work. No, because if you're valuing Bitcoin in dollars, then the amount of dollars in circulation is the thing to look at. Bitcoin, same. Right? Same yesterday, same tomorrow. It's the dollars in circulation that you have to look at, or currency in circulation, fiat currency. So yes, if more currency comes into circulation, what's going to happen? More currency versus same Bitcoin. Bitcoin goes up, valued in that currency. So yes, I am looking for a big breakout over the next 6 months or so. You can see here that maybe 130, 140, and actually going higher as well towards maybe the end of 25 into 26. Makes sense, right? If you look at ISM as well, this is from Global Macro Investor here, GMI, you know, their financial conditions index, which tries to lead the ISM. The ISM is manufacturing activity, right? So we're not even, you know, anywhere near highs, right? So you're looking for an actual boost to the ISM, which would boost asset prices massively. The big beautiful bill going through, that's going to be super stimulative. Huge investments from the Middle East into the States with AI and everything like that. It's all here. It's a massive investment boom coming. It's a massive boom in the ISM and all of these indexes. It's a massive boom in the amount of currency in circulation. And it's going to be a massive boom in terms of Bitcoin valued in dollars. It's just so positive. It's all here, right? If you trade Bitcoin, check out the link to Bybit down below. So you can click on that, go through, sign up. You can get a deposit bonus. Whatever you deposit, they'll give you a bonus all the way up to $30,000. Still got my short-term trades on, and I won't be getting out of those until the Bitcoin price comes into this red box. I think we will get there. So if you look at this bull market, right, a lot of people are still not insanely bullish, and that's because if you look at the ISM down here, you know, the real economy, the actual economy, isn't really in a boom quite yet, but it can get there. For example, the Fed is still at 4%, just above 4% interest rates. They're way offside. Now, the pressure from the president and everything's not going to move them, but you know, they're starting to say, well, maybe in September we're going to cut. They can cut 200 basis points, 2%, and still not be massively like stimulative, because if the inflation rate is around 2%, they're at 2% rates. But that's going to come down from 4. That's going to release a lot of credit creation, right, which flows into the real economy. When ISM is peaking up here, that should be when everyone's super bullish and feels rich and feels like flush with cash, which is when you get super nervous if you're investing in risk assets, because the next move is probably to the downside, not to the upside, right? But we're not there yet. And so that's why a lot of people are not like super positive or bullish, because that money's not flowing through. But the Fed could cut 200 basis points or more, and that changes the situation massively. That's when everyone gets bullish, ironically, when prices are very high, and I'll be taking profits on my short-term positions for my spot Bitcoin. You know, I just want to hold that for as long as I can, but those trades I will be getting out of here, because, you know, what you're doing up here, if you're taking long trades here, it's just not the time, right? But we could go a long way until that. Now, Bitcoin is looking to break out versus gold. Everyone that says the stock market is overvalued in relation to revenue or earnings and everything, overvalued in terms of what though, right? Because if you have a fiat currency that you're measuring the earnings in, which is completely untethered to anything, then over the next 5 or 10 years, the supply of that currency could double or more. And so if you're paying very high, you know, in terms of price to earnings or price of sales or whatever, well, it's high now, but in 5 years, if the currency supply doubles or goes up by 50, 60%, then it's not too overpriced, is it? Because the amount of currency that could flow into the economy is unknown, but we know it's going to be way, way more. It's completely untethered to anything, so it could be huge amounts. So what looks expensive actually isn't, if you realize that the amount of currency in supply is going to absolutely explode, and that's going to push all asset prices higher anyway. If you look at the NASDAQ, it's actually not overvalued if you're looking at it versus actual money, something like gold, right, which is tethered, right, to a supply rate. You know, it was overvalued during the dot-com bubble, but it's not really overvalued. I mean, it's never got back to its all-time high there. Maybe it's trying to break out versus gold. Could do, you know, but we don't really know. But something that definitely looks like it's going to break out is Bitcoin. This is Bitcoin versus gold. I mean, we're just testing all-time highs, right? So yeah, we're an all-time high in dollars. Not really relevant, right? It's also an all-time high versus the Argentine peso. Again, not really that relevant, but we are just testing all-time highs versus gold. You can see each time that we actually break through there, that's the huge bull market that is amazing for the Bitcoin price. And of course, for short-term trades, for me, I'll be looking for that breakout to maybe just get out of those short-term trades, keep my spot Bitcoin, but for short-term trades, getting out there and then waiting for the next bear market, maybe in 18 months, 2 years time. But yeah, overvalued versus what, right? I don't think the stock market is overvalued versus a currency that's going to absolutely explode in supply. This as well, Powell says the Fed would have cut rates this year if it weren't for tariffs, which is absolute nonsense. In any case, they're not cutting in July, right? They're going to start cutting in September probably, just because the pressures get too much. And look, tariffs aren't inflationary, right? And so you're not going to see too much inflation from that. The big beautiful bill is certainly inflationary, and that means good for asset prices. But the Fed are going to wait till September to cut interest rates into a fiscal spending bill that is super inflationary. It's almost like they're doing it on purpose, right? So instead of cutting early when there was no inflation and having interest rates lower, and then if there was inflation in the future, you can raise them again, what they're doing is waiting until the fiscal stimulus bill comes in, which is super inflationary, to then lower rates into that will create loads of inflation. It's almost like they want to create inflation, isn't it? Yes, because that's their specific purpose, to create inflation, to inflate the currency, to debase the currency, to debase the debt that's taken out. The reason why tariffs aren't inflationary is because they're a tax, and tax reduces the amount of currency in supply that can chase goods and services. The market told us that. The market is true, right? The market tells the truth and the Fed lies. You can see here, this is when Trump said that he would implement these huge tariffs around the world, right? The market went down because it knows that taxes are not inflationary. They are deflationary. There is less currency to chase because you're taxing more of it out of supply. When the reversal happened and when trade deals started to happen and when the tariffs came down, the market recovered again because it knows that when you reduce taxes, that's inflationary because there's more currency around chasing goods and services. The big beautiful bill is going to see us reach new all-time highs for all of this stuff because it is even more inflationary. Then you get the Fed cutting 200 basis points, even more inflationary. We know the game here is to inflate everything, stocks and Bitcoin and gold and housing and everything. Inflate the price level, inflate GDP, debase the currency to keep the debt train rolling. So the market is the truth. And the market said tariffs are deflationary. And we're in a V shape. It's literally a V, right? It's a V-shaped recovery. It's the most hated bull market. It's the most hated rally. A massive stimulative fiscal spending bill and the Fed cutting rates towards the end of the year. Markets are going to go higher to all-time highs, right? Valued in the currency. But obviously, Bitcoin is going to outperform all of this stuff. So, you know, Bitcoin is going to be the leader here in terms of price appreciation versus all of these. It's up to you how much you want of Bitcoin versus the other stuff. All of the macro indicators then are suggesting we are in the midst of a bull market, which can go on a lot longer, right? So you have the, ISM showing that we're inflecting upwards, but we're nowhere near highs. You've got a huge investment boom over the next few years from the Middle East, putting loads of dollars back into the States. A huge investment boom there, which can drive GDP. The big beautiful bill, which is going to be super stimulative as well, getting currency flowing in and out. They're going to deregulate banks and trying to get them to loan more money into existence to small and medium businesses, currency creation, inflation. It's kind of wild that the Fed is waiting for all that to happen to lower interest rates as well. But when you realize that the whole point of the Fed is to actually create inflation and to create these kind of inflation booms to debase previous currency, then you know it's kind of all lining up perfectly, right? But if you're in Bitcoin, you're just sitting here feeling great, right? You're hopeful for the future. You know that this currency is going to price in any currency debasement in dollars. You know that your currency, Bitcoin, is going to price in any actual abundance of goods and services. Like if there's a big investment boom and businesses create more goods and services versus the fixed amount of Bitcoin, those things are going to get cheaper. If you're sitting in Bitcoin for any length of time, you can just see everything getting cheaper, as it should, right? It should get cheaper. We should have abundance, right? We should have wealth. Bitcoin can price all that in. I know there's a lot of shouting about the big, beautiful bill and, they're going to push up the debt ceiling. That will forever continue. The amount of actual units, the nominal amount of units of currency, fiat currency in existence, can never, ever, ever go down for any extended period. And the reason for that is because everything is priced versus the amount of currency units in circulation. Mortgages are taken out on housing that is priced versus a certain amount of currency units in circulation. If you draw down the amount of currency units, that means the price level of everything has to fall. So your house has to fall in price and your wages have to fall. But the debt taken out doesn't change, and so you go bankrupt. So everyone, including Elon Musk, that is saying that they should stop creating debt and that they should pay off the debt, what he's saying is, I want to reduce the amount of currency units in circulation and make every single loan bankrupt. He's calling for a complete disaster and a complete catastrophe. So that can't happen, right? The other thing is, central banks, this is from the Bank of England, which is actually telling us how current fiat currency is created. As you can see here, in exceptional circumstances when interest rates are at their effective lower bound, basically when they've dropped interest rates to zero, trying to stimulate currency supply, money creation and spending in the economy may still be too low to be consistent with the central bank's monetary policy objectives. Think about what they're saying here. We're going to drop the interest rate to zero so that commercial banks create loans. If they aren't creating enough currency to stimulate the price level, to create inflation, that is not consistent with our policy objective. So what I'm saying here is that central banks specifically have the policy of creating inflation, which is why everything you hear from the Fed and Jerome Powell is laughable, because they're worried about inflation. They're worried about inflation, but their specific objective is to make sure that it happens and it gets created. The reason being is that if the currency supply didn't inflate, everyone's loans would go bankrupt. So the specific objective of the fiat currency system is to make sure, and the central banks which control the supply, is to make sure that the amount of currency units always goes up and increases over time. So any calls for stopping debt creation or stopping this are absurd. So when you're sitting in Bitcoin, you're just super sanguine about this, right? It's like the amount of currency units will go up versus the most desirable monetary system in the world, right? Currency as Bitcoin is the most desirable and has the most desirable characteristics. So it will go up when valued in fiat currency. It also will price in abundance of goods and services when they're created. So you're sitting in Bitcoin just cool, right? Hopeful, positive about the future because currency will increase, Bitcoin will price it in. Products and services increase, Bitcoin will price it in. Those things will get cheaper over time. So you're sitting here just feeling great, right? This is the amount of Bitcoin held by treasury companies, right? This is going to continue to increase as real companies want to capitalize on real capital. Because how can you capitalize on cash or debt, which is increasing in supply, reducing the purchasing power of the debt that you hold, right? That's the whole scam of the fiat system. Why would a company want to capitalize on toxic capital when they can capitalize on real capital? So as of right now, this is, like a boom. And yeah, a lot of these treasury companies aren't going to last or whatever. They may not last, but they'll still have the Bitcoin there, right? But when we see like real companies, truly that are creating profits and value, start to capitalize a little bit on Bitcoin, things are going to go crazy, right? And Bitcoin can price in abundance. This is the amount of robots that Amazon are using in their factories, which is coming into the amount of actual humans that they use. Now, I think this is super bullish because if you hold Bitcoin, what this is saying is we are making things cheaper and better and more abundant, right? If you hold Bitcoin, there are an amount of products and services that can get created for less energy and less work. Those things are going to get cheaper when valued in Bitcoin. Things are looking great if you're in BTC, right? I also want to go through this from the Bank of England here, how currency is created, right? Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. This is how currency is created, fiat currency. Fiat currency is not real. It's not Bitcoin. Bitcoin actually exists. It's on a network. Gold actually exists. That's money. The Bank of England here is confusing money and fiat currency. Money is not fiat currency. Fiat currency is a contract. That's why Bitcoin will never replace the dollar. They're completely different things. Bitcoin is an asset. The dollar is a system of contractual agreements between lenders and borrowers. It's completely different. The commercial banking sector creates new currency when it takes loans. And the reason why the central bank has to make sure that the amount of currency increases over time is because if you think about it, and sorry for the rudimentary drawing here, right, children's drawing. Let's say a bank creates a loan to a borrower, right? And they create a $10,000 loan, or $10,000 loan, plus 5% interest. Remember, fiat currency isn't real. You can't find it in the ground, you can't make it, you can't manufacture it, it doesn't grow on trees. So this borrower has a liability of 10,000 plus the 5% interest that they have to pay back. But where on earth are they going to find that 5% interest? Because they can't make it. They can't find it. They can't dig it out the ground. So where on earth is that 5% going to come from? The bank makes $10,000. So there's now $10,000 currency supply. But the borrower is short 10,000 plus the 5%. Where is that 5% going to come from? The only possible way that this borrower can pay back his loan is by the same or another bank making another loan, right? That's the only possible way that this borrower can find fiat currency that exists to pay back his loan. But this bank only creates this money if it also has interest on top. You can never, ever, ever have enough currency to pay back, because the only way you find the currency to pay back the currency is by creating more of that currency with more interest. So if currency creation stops or falls below a certain level, the price level will fall, there isn't enough currency to pay back, and you get a complete and total collapse of the system, which is why the specific objective of central banks is to create inflation by any means possible. Lower the interest rate to zero, or literally print money out of thin air to make sure the system doesn't collapse. So being in Bitcoin is the only way, right? Don't save in cash and don't save in bonds, and go out into a real money that can price all of this in. Or go to assets, S&P, NASDAQ, anything else. What I want to be invested in is S&P companies that are actually saving a little bit in Bitcoin, because that's real capital versus the bonds that they hold, which are just leaking value over time, right? Bitcoin is the answer here. And everything's good for Bitcoin, right? Because if companies bring it onto their balance sheet, that's demand for that capital as well, right? Bitcoin is the underpinning of everything. Bitcoin is capitalism, capital in business balance sheets, right? That's why I'm in Bitcoin. If you trade as well, Bybit will give you a $30,000 deposit bonus. Check the link in the description for that. And some other links down there as well. I'm James, it's Managing G. Cheers for watching, and I'll see you in the next one.